Hello, I'm Marcus Brix with the CattleFax Closing Bell. Today's Closing Bell is sponsored by CattleFax. The U.S. dollar index is on track for its worst single-week performance since this March, and its worst two-day performance since March 2009. On Thursday, the index closed beneath the 100-day moving average for the first time since June 2021. Follow-through losses on Friday will result in a decline of 4% week over week. The dollar index traded reactively to the latest inflation data released from the Bureau of Labor Statistics. According to the CPI figure, year-over-year inflation was at 7.7% in October. While historically high, the October inflation print is the first below 8% since February and beat industry expectations by 0.2 points. In the past 3 months of data, general inflation has increased by an average of 0.3% each month. Over the same time, per capita disposable income has grown by an average of 0.39% monthly, keeping pace with inflation. Still, some components of CPI remain stubbornly high. Gas prices declined by an average of 7.5% each month in the third quarter, and yet year-over-year price is up about 18%. Diesel fuel oil averaged 6.5% lower each month in the third quarter, but is within 50 cents of the summer highs after a 19.8% jump in October price levels. The dollar falling this week was based on forward expectations for the Federal Reserve tapering future interest rate increases. Inflation might be trending lower going forward, but consumer attitudes remain cautious about future growth. The Consumer Sentiment Index at 54.7 in November was 2% below a year ago and a 5-point pullback from the October's index. The forward-looking index of consumer expectations at 52.7 was the third lowest since 2011. Motor fuel prices rebounding this fall surely had an effect on consumer sentiment, as sentiment is strongly negatively correlated with gas and diesel prices. This is likely due to the inelastic nature of motor fuel demand. At the price highs in June, year-over-year gas prices were up 90%, but gasoline usage was only down 1%. Rising fuel costs without a corresponding drop in usage means a higher spend on gas for the monthly budget and a hard draw on savings. Spot WTI crude will close this week down 2% after a choppy trade and a failed test above the 20-week moving average. Heating oil futures slid 9% this week, adding to a 2-week decline of nearly 22%. Live cattle futures were flat week over week, with most 2023 contracts down less than 1%, while cash was also steady. Cattle in the South traded at mostly 150 per hundredweight and ranged between 152 and 155 in the North. Thanks for watching. Remember to visit CattleFax.com to become a member and see the latest market news and analysis.